My base case is a period of correction and consolidation, just like we saw it around 3000 and we saw it around 2000. I don't know how long that lasts. In 2020, when we first got over 2000, it lasted 3 years. And I'm not predicting that. I'm just saying that, as bullish as one might be, one should remember that these things can go on for longer than one thinks they might. That said, I'd probably be surprised if it happened again. I mean, there's been a real wake-up call. The central bank gold buying is a paradigm shift. And, the mainstream, you could say it's flavor of the day, fascination, the Johnny-come-latelys. It's really funny to hear Wall Street types talking about, they've just discovered this thing called the debasement trade. We've been talking about it since 1979. But, yeah, that though, you could say, okay, it's flavor of the day. It'll the momentum will move on to something else. Maybe not. Once the scales fall from your eyes, like the crypto crowd, once you question fiat currencies, even if your favorite crypto doesn't go where you want, you don't suddenly start trusting fiat currencies again, right? The scales never go back on the eyes. And I think in a world where not just central banks accumulating gold, but big money around the world, it's not just geopolitical risk. I don't actually think the gold dollar exchange rate is back over 5,000 now because of Iran. I think it's these deeper structural issues. And what I'm saying is I think that the new awareness that you could say gold is money, or at the very least, it's a hedge that is physical, right? It works even when the internet doesn't. You can be long with no counterparty risk. There's no short against your position. In a world where everything is changing, including, AI and other things going on, not just geopolitics, I think that's a world where people want a safe haven asset. I mean, I don't just look at the Middle East, but look at everything going on in the world. It's hard to imagine serious money, like people with real wealth to protect, going, yeah, I don't need no safe haven assets. I'm going to gamble on the new, altcoin. That sounds really exciting. I just don't see that happening en masse. So that is one reason why I really don't think that, the peak we saw in January was it. Like that was 2011 all over again. That's hence my base case. This is a correction and consolidation phase. My expectation is the next big move will be up, not down. And the longer gold holds over 5,000, the more solid that thesis seems to me, the less spiky it looks to me. I already did, Elijah. I don't remember when we last spoke. If it was before the correction, I expected to get a lot of rotten tomatoes at the Vancouver conference for saying exactly that, what you just said. But fortunately, Rick Rule went on stage right before me, same stage, right immediately before me, and said he sold 80% of his physical silver. So I think he drew the aggro there. The monsters jumped on him instead of me. All I did is say, hey, it makes sense to take some profits and look for the next opportunity to buy low. But that's really my answer here. Is like I'm not a trader to gold and silver because I took some profits. I mean, you can call me names if you want, but that's not going to help anybody make any money. I took some profits and then the market corrected. I didn't know it was going to happen. I did it on principle. The idea is buy low, sell high, right? And you can't buy low if you haven't sold anything high. Maybe if you got an inheritance or something, or you're just starting out. But as an ongoing investor or speculator, you rotate. And I don't claim to know the future or what, when markets are going to top or whatever. But if you just follow the formula, buy low, right? So you look around and okay, I've said this before, but it's worth repeating. At $5,000, gold is not a buy low thing. It's not the stealth market. People are talking about it. Mainstream gets it, right? So, now, the fact that it could go higher, it could go to 10,000 more or whatever. Sure, I'm not saying that's not true, but that's not the same as saying this is a buy low opportunity. That's a buy high and hope to sell higher opportunity. And the formula is buy low. So you take some profits and you look around, well, what is relatively on sale? There are other things that are not hovering near all-time highs.
Lobo Tigre says, gold above $5,000 is deeper than Iran's central bank buying is a paradigm shift. The January peak wasn't 2011, it's a correction. Next move up, he took profits before the crash and is rotating into oil, copper, uranium. Oil is the best bargain. PGMs surprised him. They moved with silver. Don't time the market. Follow the formula.
To try to be useful, I think the main thing that people should remember in our space, stackers, if you will, is that when there is a flash in the pan in geopolitics, it's usually brief. Like even the Gulf Wars back in the day, or the first Russian invasion of Ukraine when they took Crimea in 2014, you'd see the response in gold, but then it would fade. And that doesn't mean that gold necessarily goes down. What I'm saying is actually you have a trend, an underlying trend, and you get a big spike, and then it goes back to trend after the headline cycle moves on. And so if the trend was upwards, going back to trend actually means that you're going to come back down to a higher price. If the trend was negative, though, then after that spike, you're going to go to a lower price. So I don't know what's going to happen in the Middle East. I understand why many investors look at the fleet. Looks like what just happened around Venezuela. And there's a lot of people out there that are convinced that the U.S. is going to attack Iran again. On the other hand, it seems pretty clear to me from the pushback that our esteemed allies in the region gave to that Iran communicated to them that, hey, we may not be able to hit Washington yet, but we can hit you. So if the U.S. attacks us, we will hit you. And whether that just means closing the Straits of Hormuz or whether it means oil infrastructure and their neighbors, I think the neighbors got on the horn to Trump and said, hey, we really don't want to get caught in the crossfire here. And I do think that matters to Trump. Maybe, I don't know about his relationships in the region, but I don't think he wants to see oil prices go up in this election year. I mean, as we go into the midterms, that's exactly the wrong thing politically in the U.S. So I can really see arguments on both sides. The honest answer is I don't know what will happen. But the useful thing to keep in mind is if there is, there's an attack and there's a spike, that tends to be pretty fleeting in its duration on asset classes. When we talk about this, taking profits, buying low, selling high, I'm not talking about bullion. You and I have talked about this multiple times, and your audience probably knows I save in bullion. I don't even have a savings account. I have a current account, and I have bullion. And I don't trade that. I don't go in and out because the price is up or down or whatever. I always accumulate whenever I have long-term savings to put away. So I'm not talking about selling your gold stacks or your silver stacks. Those are permanent buys in my view. I'm talking about speculating on stocks for the purpose of making money. Very, very, very different thing. So just remember the formula. You don't have to be the super genius, outsmart all the guys on Wall Street. Just stick to the formula of look for opportunities to buy low. Don't be ashamed of taking profits when things go up, and watch, rinse, repeat. That's how you accumulate wealth. That's what the Warren Buffetts of the world do, and any of these big investors that have made tons of money, that's what they do.
Now, speaking of buying low and selling high, you mentioned the three sectors you're looking at, right? Or the three assets you're looking at right now are oil, uranium, and copper. If we could touch on all of those, as you mentioned, they've all had a run since you started talking about them. But I guess first, the best buy at the moment you see as oil. One of the things that I find interesting is if you price oil and silver, not that really any investor does that, but just look at the relative valuations. I don't think we've ever really been at a low like this, where the price of a barrel of oil is actually under the price of 1 ounce of silver, which is quite interesting.
I haven't looked at that chart, and it would be interesting if you looked at that chart on an inflation-adjusted basis. Because if you do it nominally, silver's around $80 or something. Of course, that chart's going to look off the charts. We've nominally never been here before. But if you adjust it for inflation, it's not as crazy as it looks. And I should clarify one thing. Buy low, sell high. Where I'm looking to rotate into these various areas. The copper and uranium stories, I think, are particularly interesting because they're facing serious structural supply constraints. There was a legitimate concern last year that high prices would cure high prices in the uranium space, but it turns out that that's really hard to do. Like all of those uranium mines that were mothballed or refurbished or whatever, they're all delayed, off tracks. The goalposts have been moved there, and that's really interesting to me. It's a moat, as it will. And copper, that There's no question on that. Of the two, I slightly like copper better because they're both supply constrained, but there's no copper reactor that can melt down and scare everybody out of the copper market. But these trades are so obvious that, these things are not at the low end of their spectrum. They're on the higher end of their trading ranges. So you have to be pretty selective about opportunities there. Oil is closer to the low end of its trading range, especially if you adjust it for inflation. The difference there, though, is it's not really facing the same kind of structural supply constraints yet. I agree with Rick Rule that underinvestment and avoiding this sector will have consequences, and there will be supply constraints yet. But OPEC has just been ramping up. Still, we're still not in an area or era of supply constrained oil. So sure, if something blows up in the Persian Gulf, the oil could spike, but that's not something you can predict. If we look at the charts, my view is that we're likely to see some buying opportunities ahead in oil, especially if Trump decides that he really wants to avoid any possibility of oil prices going higher before the elections this fall. I think, fire in the Middle East is priced into oil now. So if that goes away, we could see some bargains there. And I think that would be a great opportunity. I am sitting on cash now, waiting for that opportunity. If it doesn't happen, if the Middle East blows up, there'll be a spike. I'll wait for the next fluctuation. But if it does, I expect to deploy cash in the near term in that area. But I just wanted to say that it's not the same. The oil patch is not running on dry.
With respect to uranium, what is your view on that? We have seen quite a bit of a run up in 2025 from the lows, but do you anticipate better buying opportunities from here?
I'm ambivalent on that. Spot price can fluctuate a lot. We just saw it spike to triple digits and then back down again. And I was thinking, there's a buying opportunity. No, the story is so obvious. It's become an AI trade, right? And there's so much generalist interest now that I think that is spilling over into this previously niche market that even on a major fluctuation, from triple digits all the way back down to $80, the better uranium stocks barely wiggled, and many of them are still at or near all-time highs. So I think it'll take more damage. So I'm not saying that it's done and you've missed the train, forget it. I'm saying that there is, the thesis here is so obvious that there is a lot of buying. There's a lot of dip buying mentality, and that's made opportunities hard to come by. That said, as you and I speak, we're seeing major fluctuations in the broader markets based on the AI hype unwinding, the so-called SaaS apocalypse. As we're recording just last night, NVIDIA had blockbuster earnings, like up something like 70%. And this isn't a small, little junior company that can post such big gains. This is like one of the biggest companies in the world, just absolutely blowing earnings out of the water. And yet the stock sold off this morning and the markets fluctuated in a big way. So if the AI bubble really pops, turns into a waterfall event, we'll have lots of buying opportunities, all my favorite minerals. Right now, it doesn't really look like that's happening. It looks more like not quite orderly, but more of a deflation rather than a pop. If that continues, though, there could be a time where there's enough selling pressure that stops get triggered, a little bit more panic kicks in, and we start seeing the picks and shovels trades around AI sell off as well. That could create a great buying opportunity in uranium and copper, and I would be delighted. I have some of both in my portfolio, and I would love to have more. But I have to say, honestly, dear audience, I was wrong about this. I was deeply concerned that they've become so industrial, so associated with the automotive sector, that a move in the monetary space driven by the debasement trade, but like monetary inputs, could easily leave them behind. And that had been the case for pretty much the past decade. They just did not move on a monetary basis. And they did this time. When gold broke out and went over 5,000 and silver moved, in its parabolic spike over 100, the PGMs tracked silver more than gold. And I can't say that I bet against it. I didn't short them, but I didn't own them. I wasn't long either. I was out of that space because I didn't expect it. So I was wrong. they did move. They acted in sync with silver, corrected similarly with silver, jotted back up again recently, again with silver. And that's pretty robust. They've been doing that for a couple months now. And so, yeah, I got that one wrong. And that doesn't make me want to go out and buy them right now. But it does mean, the next big fluctuation where I'm backing up the truck on gold and silver, I would absolutely be looking at PGM plays as well.